Good morning, trade pros. I hope you guys are having a phenomenal day and a phenomenal week so far. It's the last day of the trading week, and we got a very, very exciting morning market update for you today, June the 19th of 2020. All right, exciting stuff. There's a lot to talk about today, so let's get started and get on to it from the beginning. All right, Chinese government, the news overnight, by the way, this is according to a Bloomberg report, is that the Chinese government has asked state-owned agricultural buyers to make an effort to meet the terms of the phase one trade agreement. All right. And remember, one of the big terms of the trade agreement was the soybean and crop purchases, the agricultural purchases from the United States on the U.S.'s behalf. That's to give Donald Trump support from those states that manufacture, or not manufacture, but grow the crops and farm them. All right. So purchase of U.S. farm products so it only reached 13% of the 2020 target in the first 4 months of the year, which is about 1/3. All right, exactly about 1/3 of the year. So in 33% of the time, only 13% of the target has been met. All right, which is 20% short, exactly 20% short of where they should be. That's a large amount of buying to do, and Beijing has really encouraged companies state-controlled companies, which pretty much is all companies in Beijing. Nah, they're not. That's a rumor. It's a joke. All right, but they've encouraged them to import from the U.S. to meet some of that crop quota, which puts in a positive sentiment because then there's less arguments, less disagreements, less uncertainty as to is this trade deal on track or not. Okay, we now know that it is on track, and that's sort of what the market's priced into the upside. In the last little bit, China has been really ramping up their import of soybeans from South America. So it's not that China didn't have a decreased demand; they were just meeting it elsewhere. Which is that's the interesting part of this market, is that one person goes on the record today and says something, and then it causes a big reaction without people having even the background context to the truth. That's the dangerous part of the markets. But hey, you know what? They move based on sentiment. So whatever the sentiment is, let's trade it. Let's not fight it. Let's go with it. But the real data here under the surface is China has been buying agricultural products, all right, and they have slowed down during the pandemic, but not as much as they are claiming, and they're claiming it as the purpose towards the United States, or towards the lack of purchase in this agreement. They have been buying it. Check their imports from Brazil. Look at all the tankers off the coast going from Brazil and other South American countries into China. All right. Anywho, this data is available. A lot of imports have happened in South America. Nonetheless, this has pushed the market up overnight to 37.5 on low volume. Low volume rallies will be tested. And today is a super important day, which is going to lead to a huge test, all right, of the rally, and there's going to be a ton of volatility. If you're a new trader and you haven't really mastered trading volatility yet, I would say that after the first 2 hours of the day, get the heck out of there. All right, get off the batting plate. There's going to be a lot of volatility, potentially a lot of crazy movement. Today is quad witch. Okay, bring your broomstick, and I do have mine over there. I was supposed to fly in on my broomstick, but it's too gimmicky. We're not for that. All right, so here's quad witching. There's 4 types of products that expire today: stock options, stock futures, all right, index options, and index futures. Now, it doesn't sound as nice if you say triple witch. It's a quad witch. The second one, stock futures, not many people trade, but they do expire today. All right, there's a lot of expiries. This event could lead to a lot higher volatility. Why? Well, there's more trading volume, all right? There's a higher rebalancing activity. If you had a hedge on and that hedge expires today, you're either going to have to put it on again or decide what to do. All right, now you have a higher delta exposure. You got to hedge out that delta on your portfolio. You have a higher gamma. You got to hedge out your gamma as well. So you're going to be swinging options. You're going to be moving contracts there, which means you might have to adjust your total portfolio position, which could lead in moving futures as well. And it's a whole kerfuffle. All these massive money managers are going to lose their hedge today, essentially, and they got to do something about it to offset their delta gamma hedges as well. Heck, Vega too, if they want. All right, and this gives speculators an opportunity for some potential arbitrage. The algorithms also get switched on a day like today, saying, "Hey, look, going to be all this movement, there's going to be mispricing. If there's desperation, there's going to be mispricing in this market. Let's fire up the algos and make a market and see if we could take advantage of 1 or 2 tick spreads on size to capitalize on this. All right, so pretty much the wild, wild west. Everyone's out there, their bazooka today, hoping that they're going to win. Here's the interesting part, though. Only fewer than 2 million expiring contracts. Sounds like a lot, but it's a small drop of the bucket. It's almost 10%. All right, so almost 10% of contracts, which is not a lot, are within 10% of where the underlying index traded. This is the 3rd largest non-December quad witch ever, which is huge. However, only a small fraction of the contracts are around 10% of where the market's been. And if you think about that, you're like, well, you know, if you're only within 10%, even though the options contract expires today, does that really affect your hedge? Because it was so far out of the money, it was so far useless that you really had kind of written that off anyways, or you had already re-hedged it. And so that's the question here. All right, there's a potential for a crap ton of volatility or not that much at all. I don't trade these days as much, especially I will try the first 2 hours usually. 9 to 11 a.m. is good enough for me. And then from 11 onward, you know, I let people who have, I mean, look, guys, I already got gray hair. I don't need any more. All right. I'm going to let other people trade it, the young guns who like the volatility on that end. I love volatility, but I don't like volatility that's not predictable. They could be a 20-point rally followed by a 16-point dump, back up 15 points. You know, you get stopped out, etc. Anytime after 12 today, I would increase my stop size and decrease my trading position size to keep it the same risk, but give yourself more room, less tight stops for an event like this, because, you know, you're going to see what it's like, all right? So because there's so few contracts that are close to the market, a lot of these hedges are useless. We rallied really hard off these March lows in the second quarter. Going to be interesting to watch nonetheless. $1.8 trillion in S&P 500 contracts alone are expiring today. Some of them right at the cash open. All right. June's OPEX is huge, and the entire quad witch as well. In addition to that, let's throw on to the volatility. Why not? The Fed today is going to be buying 3 times its daily average in bonds on the short end of the curve, from the 0 to the 2-year marker. That's the short end, right? You go 10, 20, 30 years, and even beyond, all right? And so the Fed will be buying bonds on the short end of the curve. You buy the bond is bid, the yield drops. As the yield drops, that puts bearish pressure on the market. The Fed will be in there large from 10 to 10:30 in the morning Eastern time. Write that down, all right? It's probably going to be, I almost guarantee you, a move at the top of the hour to the bottom of the hour based on that news. They're going to be buying a lot on the short end of the curve, 3 times as much as usual. And because the short end of the curve influences the 2 10-year spread, and the US dollar Jap yen is super influenced by the 2 10-year spread, you could almost assume that some of that volatility is going to leak in from fixed income to equities, just based over on rolls and portfolio rebalancing. All right, so watch the equity. If you're a fixed income trader, you probably already know this. You should be on high alert anyways. If you're an equities trader, 10 to 10:30, there's an opportunity window there for a lot of volatility to come out because of the Fed. Okay, keep that your head on a swivel. I've covered the day to you guys. You guys now know what all professional traders are watching for. It's a pretty much in-depth report that, you know, for you guys on YouTube, the trade pros in the room are on board. They get this. But for YouTube, some of it might be over some people's heads. But learn and listen. You know, this is what professional traders are talking about desks around the world. It ain't so much, you know, Chinese government buying soybeans, because we know the Chinese government is buying soybeans, just not from the U.S. They're buying it from South America. All right, so they're jawboning this thing and saying, hey, let's give ourselves a few months. We could jawbone now and say, oh, we got this. U.S., we're going to start buying crops. All right, trust us. We're good for it. And then 3 months later, the report surfaces, you haven't really bought that much. All right, what's 3 months later? September. Oh, man, you know, like the pandemic, we had a second wave. It's tough. You know, we're going to start now, though, I promise. All right, so we start now. 3 months later, the report comes out, but what happens before that? An election. All right. And so China is like kicking the bucket down the road, saying, look, an election is going to happen. There's a chance we don't have to deal with this anymore. And if they do have to deal with it again, you better believe that Donald Trump isn't going to be as easy on it. If he wins re-election in the office another 4 years, China's going to get hammered. That bet isn't going to pay off. If Trump loses for re-election and Biden sneaks in and becomes president of the United States, maybe the relationship has to start all over again. It's a new party, a new presidential candidate, and then who knows? This deal might even go out the window. And so, blah, blah, jawbone the market all you want, China. We know what you're doing. As real traders, you guys have to understand this stuff deeper than what the media reports. I love you guys. Today on the calendar, all equities are up. We got to kind of speed it up. Crude oil's up 3 percentage points to just bit over 40. Gold's up 0.3%. Bitcoin's down 0.6%. And then here in the economic calendar, 10:15. Here's another one. Fed's Rosengren is speaking on the U.S. economy. So 10 to 10:30. Okay, we're getting Fed purchases on short end of the curve. 10:15. Rosengren speaking. 12 p.m. Fed's Quarles is talking on stress testing. 1 p.m. Jerome Powell is speaking. All right, and 1 p.m. Fed's Messer is also speaking. And then we also get the Baker Hughes rig count on a quad witch day. There you go, traders. You want confusion and volatility? You're going to get it today. My plan today is keep it small, trade it early, get in there, make my money, get out, and start my weekend a little bit earlier. I don't want to dig into this mess later on. It's not for me. I don't like it. Other traders love quad witch, and as time wears on in the day, they get more excited. For me, if I'm here in the afternoon, something's gone horribly wrong. And knock on wood, I don't want that for obvious reasons. I love you guys. Be safe. Okay. One other ton of opportunity in the markets. Cash opens 9:30 in the morning, Srinivas. That's the cash session. 9:30 Eastern, New York hours. You're welcome, Trader Walt. All right, White Knight, we'll see you there, brother. It's a fun community. You're going to love it. All right, guys, have a great weekend. Be good. Send you love, joy, and happiness to you and your beautiful families. Stay out of trouble this weekend. I'm not posting bail for any of you if it costs more than $2,000. All right, petty crimes. Just kidding. No, it's actually an insensitive joke during these times. Show each other love. Darn it. It's time to show some love. Show somebody you don't know some love. Say hello and enjoy your weekend. We'll see you Monday. Take care. Over and out. Trade Pros the room. Let's get this. Boxer, send it over to you for an oil update. And then we'll bring it back for equities. I got some ideas here. And we have about 17 minutes to the open. Let's get going. Let me